Welcome to another Wednesday Wisdom. And today I want to talk to you about what will trigger an IRS audit for you. So I know it's a very controversial, kind of topic. And there's so many different things floating around. And I have seen articles last saying the IRS is targeting specific groups of people. And I have an article from ProRepublica saying that no, the IRS is targeting African Americans in Mississippi, a specific county, and this is the highest rate for a place where has mostly, catfish farms and stuff like that. Other people say, no, they're targeting the richest of the rich, and they're looking for this population that is either Republican or Democrat or this color or that or this. So listen, I don't know. I can't tell you for sure who's getting audited, what's not getting audited, what kind of groups of people. What I can talk to you about is what will trigger, what will get you on the path to an audit. So now, does it matter what color is your skin? Does it matter your affiliations? I don't know. I can't, wrong place. I have no idea. What I know is let's protect ourselves in how we file the returns to make sure we don't get on the list of audited people. And there's some things that for sure, if you do it long enough, it will pick up the interest of the IRS and the system will actually pick you up for audit. So ready or not, here we go. Number one thing that's happening is not filing tax returns. If you don't file returns for several years, and then out of the blue, you're filing a return, 99% of the times you will get picked up for audits. Like what happened? It's the assurance that you don't have the right data. How did you file your returns? Let's say you didn't file for 10 years and out of the blue, you're coming up saying, no, I had this much income, this much expenses. The chances that you actually have the receipts and the documentation and all of that is very low. That was number one. Number two, we're gonna go in amending a return that you already filed, right? And you're just adding a bunch of expenses. Say, no, wait. I told you I have $600,000 in income, but I didn't give you any expenses. So now what I'm going to do, I'm going to give you all these expenses and all this is my list. Here you go, the IRS. And you have to understand when you file an amended return, what happens is you've got to send them the receipts. You can't just file an amended return without sending the information in, depending on what you do on the amended return. So we're not going to give you the tip. What to do to protect yourself from an audit, it's going to be on a separate video. So right now we're talking what will get you audited. Okay, that was number two. And I have a long list. I might lose the numbering, so I'm just going to go and list them out for you guys, right? So then reporting several businesses on your tax return. So I see returns that have many different Schedule Cs, many different businesses, farms, and all these different types of pieces. And none of them are really profitable. None of them really show that they're a legitimate business. You might not have contractors, you don't have employees, you might not have cost of goods. It's very low income. It's you just go in and out, just expenses. Overall, you're just running losses or very close to running losses in each one of them. That's one. The other variation of this is when you keep starting a new business every year. They say, no, I closed that business last year. This is a brand new business. And the new business, did you see a new business in year one making profits? No. So therefore, I have a loss on my tax return. Okay. So be aware that's a flag and doing it long enough, you will get picked up for an audit. Okay. Next one would be reporting most of your income and expenses as rounded numbers. Now, everybody knows this. And still we see people doing it all the time. Say, how much did you have in meals? Well, $5,000. How much did you have in travel? $3,500. Okay, that's too big of a rounded number. So you're supposed to have the receipts. You're looking at your credit card statements, you're looking at all of that. You're supposed to keep some of the receipts and know what you use them for. That will give you the amount that you spend. It could be $5,375, but it's not 5,000 flat. So make sure you keep aware of the rounded numbers. Then the next one here, let's make sure I'm not missing anything. Now reporting an NAICS code. You have to understand that when the IRS gets all the returns, they go in a database and they run all this statistical data on it, right? So when they ask you, what kind of business do you have? It asks you for an NAICS code. Why is that important? Because every single code, is for a specific type of business. So that means if you're saying I'm a real estate agent, right? Your real estate agent code is not going to have the same expenses if I say I am an accountant. As an accountant, I don't need to drive all day long. I'm not going to have all this mileage. I don't have all these expenses. I sit at a desk. I'm looking at a computer. I speak to people like you, right? And if I'm a real estate agent, I actually have to go meet with the people. I actually have to drive, meet with the people, have all these things in place. So my expenses as a bookkeeper or as an accountant are going to be completely different than as a real estate agent. So how the IRS runs this? An NAICS code tells them a percentage of what's normal of each one of the expenses for that particular business. They have the averages, and all of this is public data. You have the Census Bureau that would give you the information. You have a lot of data online to find out each business. That's how we use benchmarking, right? What's normal? We know 10% is normal for this, 15% is normal for this type of expense. So NAICS code is a crucial piece. I see so many returns. I have seen so many over the years that instead of having an NAICS code, they have 99999, right? Okay, so the IRS doesn't know, or you're saying consulting. Consulting what? What are you consulting? Is it management consulting? Is it engineering consulting? I am consulting CEOs. I am consulting medical facilities. What kind of consulting are you doing? Being too broad, it shows that there's a lot of doubt and raises flags. So you have to make sure you have a description and you have a code. What kind of business do you have? Okay, so I know we went a little bit deeper on that because I have seen so many returns over the years that just are missing that piece of information. And this is crucial for you to not get audited. Okay, so I hope that makes sense. So the other one that I have is here, renting your house and deducting all the expenses on the rental. So how does that look like? I own my house and I'm gonna rent my casita, or I'm gonna rent one part. I'm gonna rent a room or this part of the house. I have an addition that's rented out, whatever the case might be, right? When you rent a part of your house, the rental expenses have to be prorated, or actually just that portion of the house can be deducted, right? So if I rent 10% of my house, 10% of the expenses can go on the rental expenses. When you deduct all your mortgage, all your property taxes, all your insurance, everything you're doing 100% on your rental, that gets you audited, okay? So don't do it, okay? So make sure you split what's personal and what's rental, okay? That's a theme. Make sure you split the personal is personal. Personal expenses are not deductible. So none of your personal stuff will be deductible, or most of it. Okay, another one, this is probably one of my favorite, and because it's the most missed by people. You don't see it talked about a lot, and it would tie into the next couple of ways to get you audited that I'm gonna mention. Your lifestyle does not match your return, okay? This is one of the biggest, the biggest, most overlooked item. People don't think about, where do I live? What's the zip code that I live in? So let's say you are in Irvine, California, right? If you're in Irvine, California, there's a specific income per capita that we know that exists in that county or in that city, in that zip code. The IRS has all that information. Listen, by zip code, they know what's the average income per family, per household. Okay, by the income that's reported. If you don't report the income that would actually allow you to live the lifestyle in the zip code you're in and all the other factors that are in that particular area, you will get picked up for audit. And this is why, my opinion, most of the audits that happened in the last few years are the low income tax returns. So most of the audits happen in the lowest brackets and the highest brackets. Okay, now why? Because in the lower one, you are probably living in an area that either you can afford, and if you can't afford, who's paying for it? Okay, if your tax return doesn't show enough cash, enough money, nothing is reported that you're not getting anything else. They have access to your bank. They know how much money you make. They know how much money you have in the banks, right? And there's no cash. You're not reporting money overseas. You might have gifts, you might have inheritances, you might have all these things, and it might be true. But one of the most audited section of people are low income. It does not matter like the color, the skin, the affiliation, I don't know if it matters. The lower income, because it's really easy for them to just shelter money. Whereas the cash, they're just reporting expenses. So this happens for various reasons, which kind of takes me to the next step. Why are you having $25,000 worth of income? You live in Irvine, California. You can't even find rent for a year to live with $25,000 a year. You're not going to pay rent. More so, own a house, live, eat, transportation, forget all the rest. Okay? So it's a crucial piece. If you report $25,000 in Irvine, you will get audited. Okay, so that's the math on that. Your lifestyle has to match. So I always ask my clients, how much money do you need to live? Because if you need $150,000 to live and you're not reporting close to that amount or showing that the deductions that make sense, that hey, I generated that money, but I invested, I put it in other things, you just expose yourself unnecessarily. Okay, so I think you got the point. So what do I have? Then we talked about reporting low income or high income. This is the most audited pieces. The highest income, they're trying to shelter money, they're trying to move money, they're very creative, and sometimes creative means abusive. I'm all pro creative. Find ways to put the money in ways that are reducing your tax. It's your right and my right. I am all for it. Abusive means that you take that measure to an extreme. So if 10% is the right way to go, you could use 50%. If moving money in this piece and you have like a percentage or a dollar amount that makes sense, and you're going all the way, moving in all the money in an account that is protected. So just be aware from what makes sense as creative and what's abusive, okay? I know we can talk about that like a whole section. And the other, there are so many other pieces, and we might have to do multiple videos on this just because there's just so much that could get you audited. So I'm just going to list a few of them, and I'll let you ask me questions if you want me to talk about any one of them in more detail. The next one will be having a large variance of income from one year to the other, which takes me to the next point, not reporting your income. Okay, so let's talk about your Venmo app, your cashapp app, your PayPal app, your, what's the other one? Zelle app, Etsy, selling on Etsy, doing Uber, doing this Instacart thing, the driving around, having side gigs, taking payments through any type of Square app, any type of app where you're taking payments, and that cash is not reported. Now reporting your income, if you got a 1099 or not, the income needs to be reported. Now reporting income gets you audited, okay? Digital currency, you've got to report transactions. Are you getting paid? Let's say you have a client and can't pay you, and they're going to pay you in digital currency. You get some crypto, okay? That needs to be reported. So digital currency is really, really hot right now. There's a lot of things going on with that. We might have to talk about that separately, okay? We talk about failing to report your income, and let's touch base on expenses. I'm not gonna talk a lot about this, but you have to have separation. Personal expenses are personal expenses. Business expenses are business expenses. You don't just report all your expenses. I have people that, hey, how much did you make? $100,000. What were your expenses? $90,000. And that might be true. But when they're a consulting business, they don't have anything else, like, well, it's the house, I drive, I have to go here, I have to buy clothes. Some of that, most of that is not deductible that you're doing. Don't report personal expenses as business expenses. Okay, look at your income and look at your return. The other one is reporting losses from a business, which should actually be a hobby. Right? We're going to talk about cash heavy businesses, a car wash, a restaurant, you have a food truck, you have an ice cream truck. Ice cream trucks all over the place right now. The summer is coming. All this, there's so easy to make money as, food truck and all. These are probably the easiest ones to, kind of get audited because they don't report. There's a reporting. If you report more than $10,000 in a cash deposit, there's a form. You got to report that. People are not reporting it. Okay. Another one that I want to talk about is large transfers and deposits from overseas, and you don't have an FBAR being reported on your tax return. You have to understand, if you have 10,000 or more in a foreign account, not one, it could be multiple accounts. You've got to report it to the IRS. And if you've got large sums of money, now you might have a relative who's giving you cash. You might have this. It could be true, but it gets you audited. Okay, so just be aware of that if you receive large sums of cash, especially if they're coming from overseas. And then we talked about abusive shelter. So I'm gonna stop here. These are just a few ways that you can get audited, and I know you don't want to get audited. So next time we're gonna talk about what can you do to protect yourself from an audit. Until next time, have a good one.